Good morning, everyone. Welcome to the Modern Market, where every day we discuss everything to do with the modern market, that is the crypto market, the NFT market, and how to make some and or a lot of money on the internet. Loaded up for discussion today, we have Bitcoin ETF net inflows on Friday, almost $500 million, talking about the ETH ETF 2 surpassing $1 billion. Eigenlayer token unlocks today, trading above $4 on pre-markets, around $6.5 billion FDV. We'll be diving into why that's significant in a little bit. And also memes have been cooling off over the last 24 hours, but there's still a couple that are running. SCF up 25%, Retardio up 18%. We'll get a sense of where we are on the meme coin market in just a little bit. We've also got the latest on price action on crypto and NFTs as usual, plus a discussion on the BlackRock Bitcoin report, which was published recently and about which I've heard very little information. So we'll dive into that. Stay tuned for it. Today, I've got Legendary in the co-host seat and we are ready to get into it. But before we do, just a reminder, friends, that nothing that we say here is financial advice, because unfortunately, this market is very risky. And unfortunately, we don't know anything for sure either. So please proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Monday, the 30th of September. One day, I believe, or 2 days before Uptober. How are you feeling?
GM doing pretty well. I feel like it's been a while since the both of us have been home and have been able to host the show from our own homes, where we have the most reliable internet and everything that's required to host the show in the most comfortable way. So
It feels so good. I'm not gonna lie.
really, really good. Yeah.
It feels so good. That's all I have to say on it. Carry on.
On the other hand, as you said, October starting tomorrow, that's definitely a good sign. We also had election day yesterday in Austria with an actually historically unprecedented result, with the far right-wing party
Wow.
winning the whole thing with 30% of the votes, followed by the conservatives with like 26% of the votes. But it's still, because Austria is one of the countries where you have to form a majority alliance and nobody wants to work with the far right, it looks like they won't be the party that will provide the chancellor, because they won't be the one governing in the next 5 years. But it's definitely been expected that this will happen if you looked at all the polls. But still, if you look at media plus social media, everyone's like pretty shocked about that.
Interesting. That's a very, very interesting situation. As we were speaking about off air, it's a challenging situation for any country, I suspect, when the popular vote has picked one particular party, but yet they will not be able to form the required majority. Yes, they may have won the majority when it comes to the vote, but they're not be able to form the required majority to take office in parliament and govern. And so you'll end up having two groups of people that, I guess, add up to a reasonable number of people, but we're not the outright winners. But I guess that's the system that's been in place. Has this happened before then, Legendary? You said it's not happened before.
No, that has never happened before. And also the conservatives and basically our Labour Party, which typically would be the ones working together, at least most of the times, they have lost so many votes that they barely form a majority. So we have 183 people in parliament, and together they would have 93 people in parliament, which means if only one of them would be, 92, if only one of them would be sick or would not attend, they wouldn't be able to basically vote on anything successfully, because their lead is so small.
Interesting stuff. Sometimes we do veer into the political when it is interesting to us, which it is. But moving away from that, Legendary, as you said, we've both been away for a bit. How was Barcelona? You were away in Barcelona for a couple of days. What was going on there, if you are able to share? I think you are. That's why I'm asking.
Yeah, I am able. Barcelona was pretty good. Basically, European blockchain conference, completely different focus from what I've gathered compared to Token, with institutional money, with banks, with hedge funds, with family offices attending. Basically, none of the core crypto or Web3 people that we would know, but mostly just TradFi. And I actually had a very good chat with the CEO of Societe Generale, whom we've been speaking about on the show when it comes to the European stablecoin. And he said a very, very, very interesting thing about competition with the US and how US is and American banks are really trying to dominate crypto to the extent that they don't leave you any leeway when it comes to negotiations. Basically, it's take the deal or leave. And also, they're throwing around money like crazy. Obviously, everyone is looking at BlackRock, and when BlackRock is running an experiment and they are throwing $1 billion at that to see if it works out, and if not, they lost the bill, and they move on, and nobody can keep up with that. So, nonetheless, they do want to catch up. And to me, the really interesting takeaway was to see that everyone wants to have a piece of the stablecoin business. Everyone sees the stablecoin market going up. Everyone sees the money that's being made. Everyone's looking at PayPal and the other companies, and all the banks want to have something to do within that stablecoin ecosystem to participate and make money from that.
Well, they must have been listening to the show, because that's what I've been saying. The best business model in the world is the stablecoin business model. Been saying it for months on the show. Am I making this up, Legendary, or did you say that when you said where you were from, the one of the CEOs of these companies knew who we were? Did they know
Yeah,
the show? Are they listening in? Are they
they
listening in now?
they're probably not listening today, but they did know the show because we spoke about SocGen, and someone did send the show to the management team, so they actually were aware of us, which was pretty cool.
That's pretty fun. That's very fun. And I endorse their their attempted entry into this business model. As I've been saying, one of the best business models in the world is the stablecoin business. And when we talk a little bit about what's catching our attention in just a little bit, maybe we'll go in that direction as we talk a little bit about of our personal allocation decisions a little bit today. But before we get there, let's get into the price action and the headlines, as always, from the snapshot, which is pinned up top, starting with the price action. Stuff is a little bit flat or a touch down today. Bitcoin is down 3% at 63.5. ETH is down 1% or so at 2.6K. Solana is down 1% at $154. In terms of the headlines, we have the Bitcoin ETF on Friday having a net inflow of $494 million net. BlackRock's ETH ETF surpassed $1 billion too. So this is very significant numbers getting put up. We're just going to reflect on those as part of our headline discussion in a bit. Also, we have Eigenlayer token unlocking at 9 p.m. PST today, trading above $4 on pre-markets. That's around a $6.5 billion FDV. And then finally, memes cooled off over the last 24 hours, but SCF and Retalio up around 20 to 25%. Interesting detail there. It looks like Three Arrows Capital, or Suzu from Three Arrows Capital. I don't know if this is a joke or if it's a meme or if this is actually happening, but some new venture tweeted out that they've made their first strategic on-chain investment, acquiring 0.1% of the Retardio Solana supply. It was retweeted by Suzu, but I don't know if that's real or not, because it's a bit ridiculous. After they've gone bankrupt, buying all the other coins. I'll ask Legendary in a minute. Some notable sales from around the space. Alien VR, CryptoPunk selling for 43 ETH. That's a V1. CryptoPunk, remember, Legendary loves these ones. Here his thoughts on that. Tyler Hobbs Fidenza selling for 28.85 ETH, and Xcopy Grifter selling for 18.89 ETH. Just quickly before we get to the NFT market, some stuff going on the meme side. As I said, things cooled off a little bit. Dogecoin down 5%. Shiba Inu down 8%. Pepe down 5%. WIF was up almost 4% to $2.30. Bonk is flat. Popcat is underneath $1 at 93 cents. Mog is down 3% as well. So memes cooling off a little bit here. They obviously went on a bit of a run the last few days or during last week. But that is the headlines. That's the price action. Legendary, should we head over to the NFT marketplace partner Mintify, see what's going on over there?
Yeah, absolutely. In terms of the JPEG market, it's a pretty uneventful start into the week. Bored Apes are basically flat at a 10.75 ETH floor. Still, over the last 7 days, they're down a fair bit. They're down 9%. Pudgies are down 1.3% over the last 24 hours, 10.3 ETH floor for them, down 4% over the last 7 days. Azukis, they are down a bit more today. They're down almost 4%, but still sitting comfortably at a 5.33 ETH floor. If we extrapolate that to the last 7 days, they're down 7.4%. Miladies are down 6%, are down 9% over the last 7 days, and currently sitting at a 2.9 ETH floor. And in terms of another collection that's actually been doing pretty well today, it's the Captains. Captains are up 12%. I don't know if you've seen the one post by OG General,
Yeah.
being that giga whale who basically has their money everywhere and was bull posting the meme land ecosystem and the MVPs that they still have been one of the best farms. Don't think that the price action is related to that, but definitely wanted to shout out that 12% and 2.66 ETH floor on the Captains.
Yeah, that's a good shout out. Memeland been kind of sticking around the 2 ETH region for quite a bit of time, so interesting to see them moving up. But I know what you mean in a sense. On the NFT side, things have also cooled down a touch. Things are fairly secure, roughly where they were. Another one that I was looking at is the Jirasan collection, which is by the people who conducted the flight to Singapore, the famous KOL flight to Singapore, which did the rounds. That's down quite significantly from around that kind of the top of that hype period, which was around 0.5, 0.6 ETH, down to about 0.4 now, something in that region. Still pretty good for a relatively new collection. Anything else, Legendary? That's the NFT side of stuff. Thanks for that summary. In general, though, what is catching your attention? It's been a while since we've been able to catch up like this. Where's your attention going? How are you allocating here? What are your thoughts?
Yeah, absolutely. Where's my attention currently at? It's been in terms of doing stuff actively, still honestly farming a bit on Blast. There's
Okay.
been some pretty generous gold allocations, including the Packbot trading competition where Sammy and I had formed a team, have competed for 400k gold. That on the one hand, I feel like it's a bit of a warm up for me personally before Abstract is launching, and I will expect to be able to kind of run it back with Abstract and hopefully have some protocols there that are without a token and being able to engage in that ecosystem a bit. So that's something I'm looking forward to being able to do on the one hand. On the other hand, when it comes to my stable coins, like I still have a good amount in stables. I'm basically very very mercenary with them. I think we spoke about PYUSD on the show quite a bit, where they had the incentives. I did play around with that on Solana and did farm a bit of APY on my stables there. So I am in a position right now where I'm like pretty comfortable to chase nice returns on the stables. And then last but not least, on the riskier side of things, I feel like the meme coin trading environment has been a bit less hostile, has been a bit less PvP than maybe a couple of months ago. I'm not the one who has the time to quote unquote spend my nights in the trenches. But I'm definitely also not here to ignore like movements like we've seen with Mudank or some of the other more recent memes. And I'm happy to allocate a bit more capital in there as well.
Hmm. Okay. That's interesting stuff. On the what was the first one you mentioned again? The first one was
Last moving into Abstract.
Blast. I like that, I like that for two reasons. One, I think so many people have moved off Blast. I was actually speaking to some founders at the Blast lunch in Singapore, and they were saying, like, look, some of these incentives are really good, and some people are cleaning up with the amount of gold they're taking just because they're still participating. And yes, if you had to share that gold amongst loads and loads of people, maybe the incentive wouldn't be that good from a crypto perspective. But the point is, right now, because there was such a huge exodus, the founders are like, God, it's almost a little bit unfair how much certain individuals are being able to earn rightfully because there are just no additional other people at the moment when it comes to doing certain things. So I like that trade, or it's not necessarily a trade. I like that allocation of attention. And then I also love the idea of just being able to run it back with Abstract. I think that would be really, really fun. From a more lazy perspective, and I am maybe I'm instinctively more lazy than you, although I do drag myself out and try to do some of these things sometimes. I really like Symbiotic here. and I was trying to set it up earlier. I didn't get a chance, but basically, Symbiotic is kind of like an Eigenlayer competitor. There's three places where you can restake ETH at the moment. It can be Eigenlayer, which is obviously the biggest in terms of TVL. They've got their token launching a little bit later today. You've got Symbiotic, which is done by the Lido people. That one is always still capped. Remember, even when Eigenlayer kind of expanded out and you were able to kind of put your ETH in the hope that, you know, you're growing your ETH stack, you're kind of locking it away, you'd get an airdrop at some point in time in the future. They grew it out by opening the cap slowly. Symbiotic's cap is also there. Like, it's not like anyone can just add it all the time, but there's actually gaps in it right now. Like, as we speak, for wrapped staked ETH, there's like space if you wanted to enter. So that's what I was trying to set up in the morning, but I didn't have time. So now I'm just saying that publicly. Hopefully you don't fill it all before I do it later after the show. So I really like that, because the marginal benefit of providing capital, and you talked about having like certain amounts of your capital legendary, is just very mercenary. If you're providing me the exact same service and I have a high level, and you're providing me the same level of trust, because to be fair, there's a reasonable chance that if something I trust much more, I will take a lower return if I'm making some kind of trust assumptions. But if someone's got the same level of trust and hasn't dropped a token yet, like Symbiotic, and of course, look, I'm not saying that they're going to be perfect, that something could still go wrong, but it's done by the Lido people. And I think the fact that it's capped at the moment means that your points kind of go further in that respect. So I love that idea of parking any lazy ETH. And I've actually got a reasonable amount of lazy ETH sitting around at the moment because I haven't allocated it in places. So that's one of the lazy things I'm looking at. I'm also looking from the stablecoin side. You mentioned PYUSD Legendary, which is the PayPal stablecoin. Interest rates on that, when you provided it to Camino on Solana or Drift on Solana, was as high as 17, 18%, no longer than maybe 3 or 4 weeks ago. That is now down to around 8%. So look, it's not terrible. Still pretty good when it comes to lending stablecoins, but it's definitely not as high as it used to be. One thing I'm looking at, although I tried to do this morning, this is exactly what crypto is like. I tried to do this morning, I identified an opportunity, and then it's the Sky rewards by the MakerDAO people. They've got crazy incentives going on right now. So I wanted to do something like that with my stables, because I think that's a new one. There's new protocols going on there. They've kind of split it out a little bit. There's a couple of things to farm just by holding stables, and it's VPN blocked. It's not available in the UK, and it's VPN blocked. So it's like, okay, now I need to have a look at this or try and put this somewhere else instead. So that was very, very annoying. But for any of you who are not in one of those regions, I'd recommend looking at Sky, given that that is the old MakerDAO team, kind of providing brand new, fresh incentives for holding that stablecoin. I've said it many times, this stablecoin war is going to be insane. And I think there's a period of time where you can really get very nice gains. So that's something I've been looking at. Legendary.
Yeah, lots of good stuff in there. Another thing that I want to ask you, because we've spoken about it quite a few times, in terms of putting your ETH to work, did you put some ETH now into the recent extension in Yolo to farm to provide liquidity basically for the house games on Yolo, or is that something that you have skipped for now?
I did do that. Yeah, I did do that. I put actually quite a lot, but I'm down. What's going on there? I thought the house always wins.
House always wins in the long run. Might be someone who goes on a lucky streak for a while, but in the long run, the house is always winning.
I hope so. So do you want to share some of the statistics around that? Because I think for the people who don't understand, just to set the context there, YOLO Game is obviously one of the casinos on Blast. And what they did was they kind of opened up the back end of the casino to say, like, look, do you guys want to share in the profits? Like, you provide the liquidity for people to do various things, and you become the house in some respect. But there was a very small, again, it was capped. And often when things are capped, that's better because it means that the gains are more concentrated. But that was capped for a long period of time. It was very difficult to get in. I believe you were in. Do you want to speak to what kind of return that saw in whatever period of time you were involved?
Yeah, absolutely. I just pulled up my stats on that. So basically, as you perfectly said, it's a single-sided pool. You deposit ETH into that, and if someone plays one of the house games with ETH and loses money there, the money that they lose goes to the people providing liquidity. In the inverse case, that someone is winning money, that money is also being paid from the liquidity pool. And as you said, the house has an edge. So the idea there is that in the long run, that pool should be up. And I have deposited basically from day one, which was 4 months ago, and I'm up 40% on my ETH deposit. So annualized should be something around 110 to
Really?
120%. I don't get it on the day, but it's by far my best ETH farm and my best, yeah, it's by far my best ETH farm period. And as you said, they've been extending the caps, but they are using a pretty interesting mathematical formula for that. For those who are into risk management or into the maths behind gambling, it's called the Kelly criterion.
Hmm.
And what the Kelly criterion basically does, it optimizes the bet sizes in a casino or in any kind of bet in such a fashion that the casino can do the most um, the most turnaround, the most volume without running at a realistic risk that someone who runs on a massive heater basically is draining the casino's liquidity. And they've been using the Kelly criterion to optimize their betting size versus the amount of liquidity that they are providing because they didn't want to open it up to everyone so that the APY goes marginally down, but more so look at what is the average betting size, what's the max betting size, and what is a liquidity pool that makes sense in relation to that. And to my knowledge, the YOLO team themselves also have the money in there. So they do have a very good incentive for that pool to just be printing more and more ETH.
Well, I hope so, because now I've entered. Just to be clear, we have no direct affiliation. We have no affiliation with YOLO. It seemed to be something that absolutely printed in the last 4 or 5 months. So that's our interest in it. Happy to share that with you guys. Look, we want to get into the final discussion point for today before we get into the bigger headlines. This was something that I think went underneath the radar and does tie in with the first headline today, which is on the Bitcoin ETFs and the ETH ETFs and all of this move, the institutional flow of capital. About on the 17th of September, BlackRock published, I think it was the 17th of September. I don't want to get that wrong, that number. Let me just double check. On the 17th of September, BlackRock published a report called Bitcoin, a Unique Diversifier. So I thought it might be helpful just to go through some of the things which they said to understand where the minds of the institutions are at as things stand. Um, the title or the additional bit of information they said why Bitcoin's appeal to investors lies in its detachment from traditional risk and return drivers. So they said, I'm showing this on screen as well, by the way, in case you prefer to watch in. Remember, we're live on X video and YouTube video as well. Got some key points. There were 4 key points that they presented to their readers. Number 1, investors considering allocating to Bitcoin are grappling with how to analyze it relative to traditional financial assets. So that's one of the challenges they noticed. Number 2, Bitcoin with its high volatility, they still say is a risky asset on a standalone basis. However, most of the risk and potential return drivers Bitcoin faces are fundamentally different from traditional risky assets, making it unfitting for most traditional finance frameworks, including the risk on versus risk off framework. I like the sound of that. Like you can't measure Bitcoin or maybe crypto assets in the same way that you have evaluated previous assets before. Number 3, Bitcoin's nature as a scarce, non-sovereign, decentralized global asset has caused some investors to consider it as a flight to safety option in times of fear around certain geopolitical disruptive events. And then finally, over the long term, Bitcoin's adoption trajectory is likely to be driven by the intensity of concerns over global monetary stability, geopolitical stability, and US fiscal sustainability and US political stability. This is the inverse of the relationship that is generally attributed to traditional risk assets with respect to such forces. So I thought that was pretty interesting. A couple of other things that they said about what makes Bitcoin relevant. They said that there are 3 types of historical challenges around money. The first is prone to inflation and debasement. Number two, it's difficult to transact across borders. And the third is that the access is limited. And they say that, Bitcoin kind of solves that in a few ways. There's a fixed maximum supply. We all know that. Digitally native and borderless, permitting near instantaneous global transfers of value. We know that as well. And it's the first truly open access global monetary system. So there's all kinds of interesting snippets here. A lot of this stuff is kind of confirming what I guess a lot of us in the space have thought already and have been convinced of already. But there's some nice numbers in addition. They talk about Bitcoin's path to 1 trillion in market cap. They've got these graphs on its long-term performance and how the drawdowns always seem to be slightly less every time. And admittedly, some of the gains are a little bit less every time, right? So they've got this chart from 2010 to 2011. It was like a 500x or something, 592x according to this chart that I'm showing on screen. Then the drawdown was 93%. Then there was a 555x. Then there was 84% down. Then it was a 104x. Then it was an 83% down. Then it was a 21x. Then a 77% drawdown. So look, the gains are getting smaller, but the drawdowns are also getting smaller. So this kind of fits in with the idea that at some point in time, some of the volatility, which is considered to be our friend in some way, because price going up more aggressively is better for the people in the space. They want that volatility, but it's probably going to see this volatility get shaken out over time as the asset becomes more and more established with with less volatility, I think. Leslie, I'm going to stop there. I'm going to have a little scroll to see if there's any other good bits of information. Anything you're finding interesting here? Anything you're noticing? Any other thoughts you're having on kind of BlackRock's approach to Bitcoin as you've seen it progress since they came into the space?
Absolutely, yeah. I think it's a fantastic report, and you mentioned some of the highlights already, but there's also another, I'm going to share that on screen, another piece that's standing out to me. And I'm just going to describe what I'm seeing on screen for those who are just listening to us. They're looking at the S&P 500, gold, and Bitcoin through major geopolitical events, and they're looking at the 10-day return and the 60-day return of that. And as examples, they looked at the US-Iran escalation, COVID outbreak, 2020 election challenges, the Russia invasion of Ukraine, the US regional banking crisis, and the yen carry trade unwinding. And basically, while in the 10-day part of that, the returns for BTC are sometimes it's up 12%, like with the US-Iran escalations. Sometimes it's down massively, 25% with the COVID outbreak. But if you look at the 60-day return on that, BTC is outperforming everything. It's outperforming the S&P 500 and gold when it comes to the geopolitical volatility. And just to have a look at these numbers, COVID outbreak on a 60-day timeline up 20%, US-Iran escalation up 20%, 2020 US election challenges up 131% versus 12% for the S&P 500 versus minus 1% for gold. Russia invasion up 15%, US regional banking crisis up 32%. No data yet for the yen carry trade unwinding because that hasn't happened 60 days ago. But basically, every major geopolitical event, BTC, admittedly, it's only 6 of them that they have been looking at in this report over the last years. But every single one of them, BTC has been on that 60-day lens outperforming both gold and S&P 500 massively.
Interesting. The thing that I find very interesting about, I don't even know that it's interesting, the observation that I have when people cut up the data, this is more a point about the analysis of data. It's that depending on the points that you choose and the timeframes you choose, you can probably, this is maybe an unfortunate reality, but also it's also an opportunity for the people who know how to cut the data. It seems to be the case that people can tell whatever story they want with the data. If you pick a particular point and talk about Bitcoin's price from X point and compare it and see its trajectory to Y point, like there is a way for you to tell a bad story about it, right? Similarly, if you chose Bitcoin's performance in a different period of time to another period of time, it would tell you a different story. So the thing that becomes more and more obvious to me is that data and charts and information is only as good as your ability to cut it and interpret it. And that's two specifically different skills. Interpretation is probably comes after cutting it, because the first thing you need to do is when you're looking at these big charts, you need to be like, well, which bits first do I need to, which bits first are like the most important aspects of this, and let me cut this area and then compare it with a different area. And if you cut in the wrong place, I feel like you could just tell yourself a very bad story, as people often do. But then the interpretation of it is as important. But Legendary, any thoughts on that? That's just one of the key things that I'm taking away here, because it seems like they're cutting it in very bullish ways, which is maybe in line with some of the stuff that we've considered before. But you do also have a prevailing story about how Bitcoin has not performed in the way that people would like when it comes to, in comparison with gold, for example.
Yeah, I think you're absolutely right on that. And in addition to that, we've also been using things that only have happened a couple of times, like the halvings, to extrapolate the data into the future. That sometimes in a way that doesn't make sense at all. And then I think I also remember, was it Vanek with their base case, bullish case, bear case for BTC? That was absolutely meaningless at the end of the day, with the bull case being an absurdly high number, with the bear case being an absurdly low number. It was multiple hundred thousands of dollars in between that. So if the saying then there is, it's either going to 400K or to zero for the BTC price, it's not really helpful. And then, because you said that, the way we want to slice up the data, what we then did on CryptoX is everyone just quoted the bull case, and the bear case kind of got lost in translation. And I believe that, reports like that are inviting, not only the data is already prepared in a way that is supporting the narrative that the institution who does the report wants to share, then you can also just cut specific pieces and bits out of it if you talk about that. Like I could, screenshot the 60-day returns and be like, oh my God, it's such a insanely good asset to trade in geopolitically volatile environments and events, that issue gets even more exacerbated.
Yeah, look, I go along with that. Maybe just ultimately on the same topic, but it's just shifting it towards the ETFs and maybe a bigger discussion on where we are, moving into October, November, December. Remember, we provided that statistic not long ago where September historically is a terrible month for Bitcoin. It's actually been good in the last month. But then October, November, December are historically the best months. So just a little bit of data to back up what's been happening in the last few weeks. We've got Tyler sharing this tweet about the Bitcoin inflows at the back end of last week. The Bitcoin ETFs had their biggest day of inflows on Friday in nearly 4 months, $494 million of net inflows, led by ARK, FBTC, and IBIT, capping off a week totaling $1.1 billion. Even the ETH ETFs caught some love with $59 million in inflows on Friday, bringing its weekly total to $85 million. Some further information, according to CoinShares, digital asset investment products saw a total inflow of $1.2 billion for the third consecutive week last week. So more generally, digital asset products are seeing inflows. We've talked about stable coins. I think in the snapshot, let me just double check this. In the snapshot, which we'll report on a little bit later, there's another bit of news, which is the stablecoin number. Almost $10 billion of stablecoins have been minted since the Fed's July meeting. So the number of on-chain dollars are just going up as well. And then finally, on the ETH side, because we've spent a little bit less time on the ETH side, and I think ETH has kind of underperformed, and the ETF is kind of being hidden out of people's way. I think people are not as proud of it as the Bitcoin one, obviously, because it's not performing as well. But even on that side, BlackRock spot Ethereum ETF surpasses $1 billion in value for the first time. This was 2 days ago, over the weekend. The block reports following a favorable week of trading. Yep, it went over $1 billion in TVL. Last week was only the second week since the fund launched that net inflows were positive, signaling renewed enthusiasm for the token, or at least that's what their take is. So, this stuff particularly on the ETH side, this stuff is definitely not as bad as what people think. And it feels like the taps are being turned on and more money is pouring on chain at a minimum. And then beyond that into some of these ETFs. But Legendary, be curious to hear your thoughts on this as we move into October, November, December. What do you see? What do you see happening here?
Yeah, it's a very good question. I think if the market trends continues, if we see even more of a rally after the election in the States, like we used to see at least for the last couple of elections, I wouldn't, or let's phrase it maybe like that. I think that if this rally is sustaining on the stock sides, and if it continues after the election as well, I wouldn't see any reason why the same shouldn't be going on for the inflows in ETFs.
Mm. Do you think it's fairly correlated to the stock side of things?
I mean, we just talked about the report. Like, if you look at the report, actually, they are making the point. BlackRock is making the point that it's not as correlated, at least performance-wise. But I think it's correlated interest-wise. If the markets go up and people want to enter new positions, obviously in the stock market, which are pushing prices, they also want to enter new positions in crypto and buy the ETF. But the correlation, at least of BTC with US equities, has been historically low. It's been a correlation of 0.2 that is cited in the article. So I don't necessarily would be talking about the price action, but more so about the interest in the market and then the inflow in the ETF side of things as well.
Okay. The thing that's kind of liberated me, this is one of my new beliefs, which has the dual purpose of A, being fun because it's bullish, but B, it's actually just quite calming as well. The new conclusion that I've come to, which I think I shared before, and is that I don't think the election matters as much as people think. In at least insofar as we're talking about crypto, and the caveat I give here is like, look, I completely appreciate for the people who are in the States, and actually it affects everyone around the world to some extent. So I appreciate there's like sides that get taken on lines which are different to crypto, and I think those are very valid as well. But in terms of crypto, which is how I'm speaking about it here, I don't think it matters who wins. And I know people will say, well, okay, one side is maybe less accommodating to crypto, at least in their words, at least in their words as things stand. Ultimately, I don't think that will matter when it comes to the price appreciation of these desirable assets that have now got avenues of liquidity unlocked for them. That is my specific point. Yes, there can be other things that the two sides can argue about, and yes, that maybe the material difference will be different on for other things. But very liberating for me to now not be as concerned as it relates to my bags. Is my basic point. Funky, your hand is raised. Official US correspondent. Is it correct for me to be so relaxed now going into election season as it relates to crypto?
Jam fam, yes, I would completely concur with that position. I mean, but I've said many times this is my third rodeo. I also just agree largely with that opinion that it's not really going to matter at the end of the day. It's really the liquidity flow. It's, the cutting of rates, more money being printed, you name it. It doesn't matter which candidate wins. They're both going to spend more money on whatever it is that their priority for their party. So all these things bode well. One thing I just wanted to jump in talking about sort of October and the months that are coming. I saw over the weekend, and I wish I could give the person credit, but somebody had tweeted something along the lines of Coinbase, the app, has now just suddenly kind of leapfrogged well into the top 500 downloadable apps, or most downloaded apps, to like 400 something on the list, and was saying this is a great indicator to watch out for, because as it becomes more and more common for people downloading it and its popularity, like when it cracks the top 50, look out. And if you guys remember, you've been around long enough, the Super Bowl in February of 2022 had the famous Coinbase ad that was just the QR code bouncing around the screen. And that was the point at which it became the number one app in the App Store, and it was sort of seen retrospectively as like the Pico top to like sell everything when Coinbase is the number one app. So if we're seeing that kind of volatility and people piling back into the space, yeah, this could be a massive run, but then might not necessarily. I think people are thinking it's going to last forever, and I would counsel against that. I think it's going to be a short, intense run.
I like it. I like that point of monitoring the App Store. An interesting, not counterpoint, but maybe an adjacent point to that was someone suggested on the timeline that we should be watching where Moonshot is on the App Store as a kind of indicator of retail interest and insanity and potential, over exuberance, because Moonshot is clearly getting traction. People are using it a lot. And I wonder whether that would be a good one this cycle. And that would be the perfect kind of thing where people say history does not repeat, but it does rhyme. Everyone's looking at Coinbase because that, in retrospect, was the thing that indicated something last time. But maybe Moonshot would be an interesting one to look at too. If you don't know, Moonshot is this new app that you can, buy and sell memes very, very easily from the App Store. And I think a lot of younger people are using it. I downloaded it the other day too, to explore. So I think keeping an eye on that would be very, very good. So point taken. I think that'll be interesting. Staying on the meme topic. Let's just go straight into there. Maybe discuss what we think's happening on that side, Legendary, because things are cooled off a little bit in the last 24 hours. Had the insane run on Mudeng in the last, I don't even know how, it feels like it's been around for a long time now, but it's not been so long. We've got Mudeng down almost 20% in the last 24 hours. So a healthy correction, I suspect. It went above 0.3 cents. Now it's down at 0.22. So a big correction there, $220 million FDV. But, obviously starting from nothing not very long ago. Some of the majors have, on the 7-day chart, a lot of this stuff's up 25, 30%. Shiba's up 25, Pepe's up 30, Dog with Hats 37, Bonk 34. Popcat is actually flat on 7 days, but Mog's up 26. So a lot of this stuff has moved a lot. What do you still see memes as something which are going to run intensely? You said you've been participating because you think that's where the liquidity is. What's your approach here at the moment?
I think there is more to go, because we haven't had this period where basically a meme like Mudeng is running from 0 to 300 mil without any major hiccup, and that's obviously inspiring so many other animal memes as well that are shorter lived than that. But I always think that when you have one meme or one narrative leading a bit and basically managing to get the entire attention of the timeline, I've never seen people like Cook posting so intensely about Mudeng basically every other minute. And so do other people. So the people who have been sidelined, and so the people who have invested. And I generally think that a run like this, and we've seen it with Bohm as well, is kind of a tide that is lifting more boats in the meme landscape, if you want to put it like that, and just allows for, at least for the time being, for a friendlier trading environment. And that's definitely something that I want to make use of. Again, if we're like in the most hostile environment where you have one coin that makes it a week and then is dying after that, is dying like a day after it has reached, I don't know, like 20, 30 mil market cap, I'm not interested in that, because it's not worth the time. But with things that have a bit of a longer time horizon, potentially, I do want to participate more, and I have been participating more in that.
Yeah,
Kind of finding the right balance between profit and time that I have to put in.
Sure. It's definitely not my speciality either, but I actually bought a couple on this pullback today because I thought, okay, there's a little bit of a pullback. I'm going to play around with some of the money on the Solana phone. The Solana phone bags are like not my real bags. They're just like money that exists on a phone somewhere. So I bought some memes on the Solana phone. I think I only hold memes on the Solana phone now. So yeah, I'm playing around. I do think just in line with everything else, my approach is to, I think everything is moving in the right direction, but I still would not, and this is purely a risk management perspective. If I make some money on something else, I split it, and I typically will go for USDC and Bitcoin, for example. Just want to keep stacking sats. Just going to keep doing it. I know that maybe Pepe is going to move higher if Bitcoin moves a few percent. Maybe Pepe is going to move higher, but like that's not the point, because Pepe can drop faster, and then all those gains never really existed. So whereas I'm more confident in Bitcoin. So that's kind of my approach. We've still got one big headline to go. We're going to talk about Eigenlayer and just place the importance of that in context in just a little bit. But let's hit the Web3 Roundup to get you up to speed with everything else that's been happening in the space in the last 24 hours or so and over the weekend. Number one, FTX is rumored to start paying back those who lost money this week, but they will be short on the crypto side. So this is not been reported like guaranteed. It has been indicated that some of these payments, or the people who lost money on FTX, will start getting that money back. It appears that they might not get all of it back in terms of their crypto holdings, but some of that money should start flowing back relatively soon. Initia raises $2.5 million in a 2-hour raise on Echo. That's pretty impressive. Remember, Echo is the community based investing platform where it's like, if you cannot get access to private deals by yourself, there is a way for you to set yourself up there and participate in some of these rounds. Almost $10 billion of stablecoins minted since the Fed's July meeting. Remember, the Fed July meeting at which it left rates unchanged, but indicated a September easing was likely. So a lot of people coming on chain from July, knowing that these rate cuts were going to start happening. Next, crypto service provider acquires Swiss-based crypto finance asset management unit. That's Matrix Port. A few more pieces of news from around the space. Ethereal Dex makes an Athena governance proposal to build a USDE Dex while benefiting ENA holders. Remember, Athena is the synthetic dollar, which has really blown up, almost $3 billion in TVL. And they have had an offer for someone to build a DEX on top of their ecosystem. Pudgy Penguins revealed the Polar Challenge, an arcade game live across various arcades in the USA. And finally, Fidenza receives a $201,000 loan on Gondi after it was purchased at Sotheby's a few days ago. That was really cool. That was happening on Gondi, where this Fidenza in particular that was about to be sold at Sotheby's already had standing loans on it before the purchase. That is pretty outstanding innovation and a great example of what NFT/crypto technology can do for unlocking liquidity. So that's the Web3 roundup from around the space. Legendary, I know you're going to now place in context this Eigenlayer drop, which is going to happen in the next 24 hours, and why we think it's important.
Yeah, absolutely. So the key thing to know is the Eigenlayer tokens will be unlocked on September 30th, so today at 9 p.m. PST. As you mentioned in the snapshot, if we look at the pre-market trading on Whale stock market, for example, the token is trading at $4.40. However, I think the implied FTV of Eigenlayer puts it at a bit more than $6 billion. And there's actually a very interesting post by Kairos Research, who is looking into a bit of the supply dynamics and why they might look a bit different from what we expect them to look like. And for those reasons, I'm going to get into that in a second, why we might be expecting a good amount of volatility on the Eigenlayer token trading. So if you look at the supply dynamics at launch, there's going to be an eigensupply of almost 1.7 billion tokens, which are shared between the first and second stake drop, which we both covered on the show. And if you look at that, the total circulating supply at launch should be roughly 200 mil eigen, so roughly 12%. However, if you actually look at the numbers, we'll see that for the first season, I'm sharing this on screen as well, only 85% of the tokens have been claimed. For the second season, 22% of the tokens have been claimed. And additionally, 73 million Eigen have been restaked via Eigenlayer. So the actual float is way lower than those 220 mil. The actual float is closer to 40 mil. And that basically isn't a 12% float. That's a 2.4% float in reality, which kind of would make it one of those low circulating supply, high FTV tokens.
Mm.
And especially with the staking of the Eigen tokens, it's going to take another year until those will be unlocked. So for that reason, while at the first glance it seems like 12% of almost 12% of the token will be coming to market, and that's a reasonably high circulating supply, the reality is that it's way, way lower than that figure. And again, at a 2.4% circulating supply, there's quite a lot of volatility to be expected until the price discovery settles for what the market will think the fair price of Eigenlayer will be and the fair valuation of Eigenlayer will be.
Okay. That's interesting stuff. Great breakdown. Remember, Eigenlayer is the premier, well, the first and premier ETH restaking protocol. What do you think of this? Remember, we've said this before about pre-market valuations. They are typically not correct, and usually they are on the high side. Now, in this instance, it's trading at 6.5 billion FDV. I would struggle to think that that is wrong to the high side. Maybe we are just eternal optimists in this space now, and we're always hoping that the tokens come out higher. But I would just remember being very, very comfortable with looking at previous pre-market predictions, being like, nope, that's too high, that's too high, that's too high. For the first time, I'm looking at this one and thinking that is too low. What do you think about that assessment from me?
So if you look at a comparable like EtherFi, obviously being the first basically restaking manager that had launched a token and utilized Eigenlayer in the background, EtherFi is up 5% on the day, trading currently at $1.80, and that is a $1.8 billion FTV. That's based off 90% in circulating supply. So basically, then the 6.5 bill would be almost a 4x on EtherFi for what is the actual protocol that's being used in the background for what is the original restaking solution, if you want to put it like that. That doesn't seem unreasonable as a multiple to apply. But honestly, I also wouldn't be surprised if it's just a 2x on that, if it's just like $3.5, $3.6 billion. The thing that really would obviously surprise me is if the FTV would be below EtherFi, because again, EtherFi is a product built on top of Eigenlayer, and it would be very weird to see that fall below that. I can't imagine that. That would be really surprising. But I think that $3 to $6 billion range is reasonable. But again, because the actual circulating supply, the actual float is so low, we'll definitely see a good amount of volatility.
Okay. I think that's actually a very good comparison to make. Maybe a question that where my brain went next was the key distinguishing factor between Eigenlayer itself and EtherFi, or at least from the consumer perspective, is look, one, you just go direct into Eigenlayer, you park your ETH there with them, you restake it. EtherFi, yes, it has the Eigenlayer capability. You can park your ETH with them, they restake it for you, go on Eigenlayer. But you can actually also go into a bunch of other places. You can go into Karak, which is the Eigenlayer competitor. You can go into Symbiotic, which is the Eigenlayer competitor. They've got these USD vaults. They've got these ETH vaults where you can earn additional yield. They've got a IRL debit card, which you can like stake your ETH, use your card to borrow dollars against the ETH and pay for your coffee, and then do interesting things like that. So when you said, I mean, it's an interesting question. I hadn't really thought about it. which one's more valuable? Eigenlayer itself, kind of providing all this restaking capability for ETH, or this, maybe they're just very different. Yes, one is a doorway into Eigenlayer, but then it goes off and is producing all kinds of other things. So yeah, I don't know. I don't know what the conclusion is on that yet, but do you have a final thought there?
I mean, one's kind of Eigenlayer is kind of the app store, if you want to put that in Apple terms. And then there's apps being built on the app store, and you would have apps that are like highly successful, but the infrastructure tech company behind it should, in my opinion, have a higher valuation. That's kind of how I've been approaching it.
Yeah, when you look at ETHFIs, then maybe it does put it into context, and maybe 6 to 7 might be very reasonable. Look, guys, we hope that was interesting for you. As usual, we do this every single day, Monday to Friday at 7 a.m. Eastern time for 1 hour. You can catch us live on X, on YouTube, and also catch us up on Spotify and Apple Podcasts if you prefer to consume your media there. Hope that was an interesting show. Thank you to my legendary co-host, Legendary and Funky, our routine US correspondent who's up on stage with us. Have a wonderful day. Take care. We will be back again with you tomorrow. Bye-bye.